Hello and welcome to Interest TV. It has been a rocky year in the stock market, especially in Vietnam, where today's guest comes from. She is Lan Nguyen from PYN Elite Fund. Welcome, Lan.
Hello, this is Lan Nguyen from PYN Elite Fund. Nice meeting everyone here.
It's good to have you here. Let's start. And could you first introduce yourself and your role in PYN?
Okay, I joined PYN Elite Fund in October 2021. So I have been with PYN for more than a year now. And I cover the real estate sector, the oil and gas sector, and also Vincom retail, which is more of a retail sector. Before joining PYN Elite Fund, I have been working for 10 years in two different foreign investment funds that have been focused on Vietnam's listed equities. And I used to cover a lot of sectors ranging from banking, financials, real estate, retail, manufacturing, and other stuff.
Good to hear. You have a long career in Vietnam stock market already. We got several questions from the audience, and one of those were related to your personal investments. Have you invested in PYN Elite Fund yourself?
Yes, you can say I have invested in PYN Elite Fund myself because every year our fund manager he offers us some subscription to the fund shares. So at the beginning of 2022, I have some subscription to PYN Elite shares. So you can say yes, I have been investing in PYN Elite for almost a year now.
One personal question to add. PYN Elite was familiar with you before you joined the team. Am I right?
Yes, I have known Peta, and before Peta, I know Mai Lee, who was also a previous employee of PYN since 2013. So we have been knowing each other in the industry for several years before I come to PYN Elite.
Let's move on. It has been very unusual and unexpected year in Vietnam. The government and the regulators have done several disciplinary measures, which seems to be caused the turmoil in the stock market and bond market. Could you elaborate what have been done and what kind of negative side effects those have?
Okay, about my thoughts, I think in this year there are two series of arrests that have been done by the Vietnamese government that have caused the market turbulence this year. The first is the arrest of some leaders in some listed companies that have been manipulating the stock prices at the expense of the retail investors for several years. And the second is the arrest of the two founders of two unlisted developers for their wrongdoings in corporate bond issuance that have spread the fears on the corporate bond market and as well as the stock market. I think the consequence of the arrest of two founders of the developers that have wrongdoings in corporate bond issuance, the consequence is the lack of trust by people on the corporate bond market, and that also led to the liquidity crunch in the economy. And combined with rising interest rate, that has led to the stock market turbulence in the last 3 months, as we have seen. I think the negative side effects of the government's disciplinary measures are evident, but the long-term impact should be positive because that will reduce the level of manipulation in the stock market and will create more discipline in the corporate bond market so that the corporate bond market can develop more healthily in the long term. So that will also create less risk to the financial system in the longer term because if the government let the wrongdoings in the corporate bond market happen for a longer time, then the consequences would be even bigger than now, and the risk to the financial system would be harder to fix than now. So overall, I think those are necessary moves by the government. Perhaps we have to bear the short-term pain, which is the market collapse, but I think the long-term impact should be positive. And I think the government, they have realized the negative side effects that their measures have done to the stock market and also to the economy. So in the last 3 to 4 weeks, they have done a lot of measures to help the corporate bond market and have the liquidity in the banking system as well as the economy, and also have the real estate developers to overcome their difficulties. I can list a few measures that have been done by the government in the last few weeks. The first one is they decided to lift the credit growth quota by 2%. The second one is that they decided to amend Decree 65, in which they allowed the corporate bond issuers to extend the tenors of their corporate bond by 2 years with upon the approval of 65% of the bondholders. And I think another important point of the amendment of Decree 65 is that it allows the corporate to convert the corporate bonds to real estate assets and reduce the liquidity pressure on them. So I think, and also the government has set up a working group, which is led by the Minister of the Construction, to help the real estate developers to clear all the legal procedures for them to be able to bring to develop their project and bring the products to the market, and that way they can get the cash flows from the home buyers and help them to overcome the situation.
A lot of have been going on. PYN has several holdings in the real estate sector, such as Vinhomes and Vincom retails. And after the banks, it's the second largest sector in the portfolio. What are the key fundamentals that drive the sector? And if you please, you could tell a little bit more about Vinhomes and Vincom retail.
So among our portfolio, Vinhomes is in the real estate sector, and Vincom Retail is more like a mall operator. So I would say Vincom Retail provides us with more exposure to the retail sectors and Vietnam's domestic consumption, which has been growing very strongly. As for Vinhomes, that is the biggest real estate developer in Vietnam. And I think in terms of the real estate sector, I think there are two key drivers for this sector to grow in the longer term. The first is the enormous housing demand, and the second is the lack of housing supply in the two biggest cities in Vietnam, which are Hanoi and Ho Chi Minh City. In terms of demand, I think, as you may have known, Vietnam has 100 million people, and about 25% of them are living in either Hanoi or Ho Chi Minh City. But half of them have not yet owned any houses and are saving every day to buy a house of their own. That led to more than 3 million unmet housing demand currently. And other than that, there are more people moving to the big cities every year because if they stay in the countryside, they cannot find a decent job. Vietnam's percentage of urban population is now only 37%, which is one of the lowest in the region, because other countries like Thailand, it is 51%, China 61%, and South Korea 81%. That is the reason why Vietnam's urban population is forecasted to continue growing at 3% per year, and can reach 56% in 2040. That will even lead to higher demand for houses every year in the big cities. That is about the demand. And in terms of supply, I think the lack of available land bank and the difficulties in getting the projects approved in Hanoi and Ho Chi Minh City has led to very, very limited supply. And that situation might continue in the next few years, which leads to the forecasted supply being only half or even 1/3 of new demand in the next decade. However, I think that was the big drivers for the real estate sector in the longer term. However, the sector is going through a lot of difficulties because of the high interest rate. In only 3 months, from September to November 2022, the deposit interest rate as well as lending rate in the market have increased by 300 to 500 basis points. And that has led to the real estate market being frozen currently. But it was not the high interest rate was not because of the high inflation. High inflation in Vietnam is still very low, as only 4.4%, and it is forecasted that inflation next year will stay below 5%. But the high interest rate were caused by the liquidity crunch in the economy and the pressure on the exchange rate, which was caused by the strong US dollar. And that made the policymakers to raise policy interest rate by 200 basis points this year. But now the pressure on the exchange rate has eased. So the policymakers, I think they have the room to reduce the interest rate in 2023, when the Fed fund rate may peak at around 5 or more than 5% in the next few months. So I think there are room for Vietnam's interest rate to come down. And I think because the government has done a lot of measures to help with the liquidity in the economy. So I think in the next few months, when the liquidity in the economy is, the liquidity crisis is, the interest rate can come back to normal levels by third quarter or fourth quarter of 2023. And that will make the real estate market become warm again. So this is, in my view, this is just a temporary and unusual incident. The fundamentals of the real estate market in the long term doesn't change. So that's why we still have a big position in Vinhomes. As for Vincom retail, I think with respect to the retail sector, and Vincom Retail is the biggest mall operator in Vietnam. It has the largest market share of over 60%. I think the drivers for Vincom Retail would be the low mall penetration in Vietnam, because the mall net leasing area per capita in Hanoi and Ho Chi Minh City is only 14% of Bangkok and 25% of Manila. That creates a lot of room for growth in the future, and also create room for more positive rental reversions in the future due to the lack of leasing spaces. And second is the fast-growing domestic consumption in Vietnam, because Vietnam's retail sales before COVID, it has been growing by double digit. I think average is 11% per year for 10 years before COVID, and I think the slowdown of retail sales in 2020 and 2021 was only caused by the COVID, because starting from 2022, retail sales and service revenue has picked up strongly. And in the first 11 months of 2022, the retail sales has grown by more than 20%. And we believe the retail sales will continue growing at around at least 10% in the next 10 years. So I think there are a lot of chances for Vincom Retail to continue their expansion of malls, and also they have a lot of land bank to do that mall expansion. It is trading at around 40% discount to traditional peers in terms of PE. So that's why we also have a very large holding in Vincom Retail.
What about the e-commerce? How does it change the field in Vincom Retail?
I think e-commerce has been growing very fast in Vietnam, but the mall operators they are still doing well, because people they come to malls not only for shopping, but they come for entertainment and for social activities. And a modern retail format like Vincom Retail they are having, they offer from social activities to entertainment to F&B to shopping. So it's not just to come to the malls for doing shopping, but for doing a lot of other things, and also buying the necessities as well. So I think the demand for people to come to the mall will continue to be very strong in Vietnam in the next few years.
I see. It's kind of same kind of trend like in Finland, that you go to the mall to entertain yourself and your family. Looking from Finland, it is difficult to fully understand the differences between Asian economics, and a lot of discussions go around China. In general, from an economic perspective, how important China is for Vietnam and what happens in China?
Okay, I think the Vietnamese government has been learning a lot of lessons from the Chinese regulators in managing their economy and also developing the real estate market. I think the good point about Vietnamese government is that they don't try to copy everything from the Chinese regulators, and in fact, they only copy the good ones and not the bad ones. I can give you an example. In 2020, we adopted China's zero COVID policy, and we were very successful, as Vietnam was one of the few countries having positive GDP growth in 2020 because we adopted the zero COVID policy. But by summer 2021, when we realized that zero COVID no longer work in Vietnam, we decided to scrap it immediately, and we decided to in only 4 to 6 months we have vaccinated 100% of the country's population, and we got our zero COVID policy and have and all economic activities have become normal starting from October 2021. But at the same time, China, by November this year, they still have zero COVID. So so that's why I said I'm very positive with Vietnamese government. They try to copy the good things from Chinese regulators, but they don't copy the bad things. And they are very smart in that aspect. In terms of the policy relating to the real estate market, I think the Vietnamese government has learned a lot of lessons from China as well. I think they realize the consequences of the policies that China has been doing for their real estate market. I think the biggest thing is the common prosperity policy, which include the 3 red lines that has been applied in China for more than a year now. And the principal housing is for living in, not for speculation. So you all see the consequences those policy has had on the China's economy as well as and especially the real estate market. But yes, Vietnam has learned from that lesson. So we don't try to tighten the real estate market. Instead, we try to support it. And I think the Vietnamese government, what they have been doing is they just want to correct the wrongdoings of the developers, especially the unlisted ones that have been, expanding their leverage excessively in the last few years. And some of them, they issue the corporate bonds to mobilize money from the retail investors, not just for developing the projects, but for land speculation. And the government, they only try to fix that. They don't want to kill the real estate market because, Vietnam is very similar to China in the aspect that we think the real estate market is very important to the economy. So if we try to tighten the real estate market, it will slow down the economy as well, because the real estate market, other sectors, they depend on the real estate market as well, such as construction materials and furniture, and especially the financial system and the banking system. It also depended on the real estate market. So I think Vietnam, the Vietnamese government, they want to copy the good things from China's regulators, but they want to, learn the lessons, and they don't copy the bad things, which I think is a very good point.
So China is like a good example for many ways to Vietnam.
Yes.
Back to Vietnam, we know that you're expecting 5.5% economic growth in Vietnam, but could you tell a little bit more about what expectations you have for the upcoming year? What are the drivers and the main risks, and what needs to be changed to the market to rebound?
Okay, I think my biggest expectations for the market to rebound next year was on the government. I expect them to be more proactive in its policies and measures to support the corporate bond market and also the real estate market. I think at the moment they are discussing several other measures, and one of them is to set up a corporate bond stabilizing fund to restore the trust of the retail investor in the corporate bond market. I think they also discuss more measures to ease the difficulties in getting the real estate projects approved. And I think the biggest risk, I think, for the market would be for the Fed to be more hawkish, and because that can prompt Vietnam to continue raising interest rate higher. But I think there is low chance for that. I think we are very near the interest rate peak now, and I think it can reach the peak in the next few months. So I think the government has more room to reduce interest rate in Vietnam. And for the market to rebound, I think it needs a restoration of confidence in the corporate bond market and also the real estate market. And I think the second thing is interest rate had to drop to the level before September 2022. That will give a huge support for the market sentiment, not just the real estate market, but for the whole economy and for the stock market as well.
Let's see what will happen. Thanks for your time, and Merry Christmas and next year.
Thank you, and Merry Christmas, and have a happy and successful year in 2023.
Thank you.